Okay, what is going on, CYPRX advanced YouTubers? Welcome back to another CYPRX YouTube video breakdown. As always, if you're interested in learning about cryptocurrency, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, we're going to cover a beautiful trade entry that we placed on Gbpjpy that resulted in about 120 pip profit. We are still currently floating in that position. I'm going to show you guys step by step why I was able to catch this move, go over some messages that I sent to the CYPRX students, walking them through the trade. I literally talked them piece by piece through the trade, told them where I was entering in at. As you guys can see via the pictures that I'm going to display to you all from our CYPRX private group chat, I had mentioned to the students that I have buy stops at 158.075 and that if price keeps dropping lower, so will my buy stops. I had mentioned to them also that we need to see price break the 158.400 level to confirm any bullish momentum, and that I would really like to see price hold the 158.00 psychological level. And we got all of those things, which resulted in a beautiful risk reward ratio of about 1-4, currently floating in this position still at around 119 pips. Like I said, overall about 120 pips scalp on Gbpjpy, breaking this trade fully diluted down for you guys on YouTube. Okay, so again, even if you do trade, you know, cryptocurrency, foreign exchange, commodities, indices, whatever the case may be, whatever poison you choose, you can utilize this strategy, the CYPRX strategy that I teach you guys on YouTube, to capitalize on situating yourself on the right side of the market. Nothing that I constitute here is financial advice. This is just what we do here at CYPRX. You guys can take bits and pieces of this information and utilize it. Anybody that wants to learn in detail our strategy from a much more in-depth perspective from what it is that I display to you guys on YouTube, the link is in the description down below. Guys, make sure that you're not clicking on any outside links. I do not reach out to individuals to join CYPRX. You guys are more than welcome to join yourselves, cyprx.teachable.com. We are not going to be letting people enroll for much longer. This is a private community, and I'd say, you know, probably maybe the next couple of months, you guys are going to see me stop mentioning cyprx.teachable.com and people are not going to be able to enroll. So secure your position now. If you guys want to learn the strategy, again, reach out to me. If you want to schedule a Zoom call, you have any questions about the mentorship, you guys are more than welcome to. So before we get started, make sure that you smash that thumbs up button, like this YouTube video, really do appreciate it, and subscribe to the channel. So first, before I even go into this fully diluted breakdown for you guys, I want to talk to you guys about a pattern that it is that we see and recognize here at CYPRX. And that is called a liquidity grab, right? So what we look for here at CYPRX is for the market to show us some type of institutional move. Well, we know that institutions are the only people with the amount of money to manipulate the market. So what we wait and look for here at CYPRX before we even get involved in the market is a liquidity grab. That is our first confluence here at CYPRX, is before we even get comfortable entering into a position as a retail trader, we wait to see that market movers are involved in the market movement. So with that being said, we know, logically speaking, that banking institutions are the only people with the amount of money to move the market in this type of way. So what does that mean? That means that as CYPRX traders, we wait to get involved until we see this type of pattern. It's very easy to identify, which is a previous low set in the market coming sweeping and taking that low, or the liquidity, activating the liquidity beneath that low, or tapping into the liquidity beneath that low in the form of over leveraged buy positions from early traders or people that are willing to sell at these lows, okay? And then we like to see a market rally higher, breaking previous market structure, okay? This is the formulation to our overall trading strategy. Once the market comes back and retraces and creates the definition of bullish order flow, we can then confirm that the market makers are in control of whatever market we are currently looking at, whether that's cryptocurrency, commodities, indices, or foreign exchange. The majority of traders here at CYPRX trade XRP. They day trade XRP, they day trade Gbpjpy, which is a foreign exchange pair. We have a couple of other traders that trade gold, other different foreign exchange pairs, and other different cryptocurrencies. This strategy works across the board. So this is the bread and butter to what it is that I'm going to be teaching you guys today. So again, you know, screenshot this, draw it, whatever the case may be, just memorize this pattern. So we're on the 15-minute chart right now, and I want to show you guys where price action left off last week. So last week, you guys can see we had this nasty meltdown here on Gbpjpy, which resulted in price action halting at around the 156.00 psychological level. If you guys look to the right hand side, you guys can see that psychological level right here, 156.00. I'll even go ahead and I'll mark it off for you all. All right, beautiful. In that same pattern that I just showed you guys can see the market makers make, which is what? The market grabbing liquidity beneath lows, taking the market and showing us a willingness to make new highs, okay? When we see this type of pattern, here it is right here, the market makers grabbing lows and showing us the willingness to make new highs, we know that the market makers are now involved in this area. We know that they have no interest in lower price action, and that as scalpers, as day traders, if we want to be fine-tuned with what the market makers are doing, we need to understand that we want to buy at previous lows or areas of demand or areas of discount, right? So what we're looking for as scalpers here at CYPRX is that same pattern before we get involved in whatever trading session we're looking to get involved in. The majority of us here at CYPRX trade New York session. It's the best session, in my personal opinion, for this trading confluence to come into fruition. But again, what you can see here is the market showing us a willingness to grab liquidity from lows and make new highs. We traded this trading pair during this New York session, coming into this New York session. Again, where can we see that trading pattern? Well, would you look at this? Here's 1 day's worth of price action from this Asia session to this New York session. This is 1 day's worth of price action. Coming into the next day, we see another Asia session start, coming into another New York session. And where is that pattern? Right here, guys. We see the market grab liquidity from lows. If I zoom in, we see the market grab liquidity from lows and make new highs. So what is this, guys? This is the definition of bullish order flow. We can see the market makers giving themselves discounted price and then buying price action, right? Same thing, giving themselves discounted price and then buying price action. This is the definition of bullish order flow. This is why 90% of the people in the market have no idea what directional bias to take in the market, because they don't know how to identify proper bullish and bearish order flow. Regardless if you're a scalper, day trader, intraday trader, swing trader, whatever the case may be, your ability to identify this pattern in the market, in my personal opinion, again, not financial advice, is what's going to set you apart from everybody else in the market. Everybody else in the market is trading what 90% of everybody else in the market is trading, which is retail methodologies, support, resistance, order blocks, Wyckovian theory, whatever the case may be. If you wipe all of that out of your trading analysis, your clarity in the market becomes so much more well-defined. So now that we've seen this pattern happen day one, day two, all we simply did here at CYPRX was we waited to see that pattern happen again on the day that we were personally looking to trade. This was Friday's price action, this was Sunday's session open, and this was now currently Monday's price action. So now diving in to that same price pattern, what can we see? Another Asia session open. We see lows here. This is where the Asia session candlesticks start to open, or the daily candlesticks start to form, right? And we see the market grab liquidity from these lows and show us the willingness to go higher. So coming into this New York session, the mindset that I had was that this was a new fractal A to B move. If you guys can see, let me zoom into the charts for you all real fast. Coming into this New York session, we can see that the market makers grab liquidity from this little tiny low right here. London session gave themselves discount and made a new high in comparison to the previous area of interest, right? Where we can see the market makers created a low or a trap, grabbed that liquidity, and then broke market structure. Would you guys look at that? Here is that same exact pattern right here that I just drew for you guys on the right hand side of the charts, okay? Where we can see the market makers grabbing liquidity from lows and sending the market higher to make new market structure highs. So now CYPRX traders, simply all we did was we waited for a discounted pullback, because we know that the banking institutions are not going to buy from a high. No. What are they going to do? They're going to manipulate price down to previous areas of interest where previous banking institutions bought from to scale into their overall position. Well, if we know that London, all right, that's an L, I'll put LO. We know that London bought from this low right here. Coming into this New York session, we were operating at a high. We know that New York session banking institutions are not stupid. They're going to manipulate price down to discount and then take buy positions. Well, we know overall, looking at this area of price action, that the past 2 days have respected this same exact pattern. So logically speaking, let me flip the script for you guys and give you guys a bearish perspective as to why we weren't looking for premium sell positions. Because if the past 2 days of price action were bullish, we know that we have areas of interest that would need to be broken and hold bearish order flow beneath these psychological levels before we confirm any type of bearish reversal. So what does that mean? Logically speaking, the market makers are creating higher highs and higher lows. Here is a low, here is a higher low to a higher high formation. So what can we see? We see higher high, higher low, higher high, higher low formation. So we have areas of interest coming into trading this New York session that we would logically need to see, guys. This is literally just logic in the market. Before we seek to take sell positions, if the past 1, 2, and now coming into the third day's worth of price action is respecting bullish order flow, why would you trade against what the higher time frame is doing, i.e. the 15-minute chart? Okay, why would you trade against that? Have you ever heard the term trade with the tide, or the tide of the market and not against it? Okay, or with the higher time frame directional bias. Trading against the higher time frame will consistently get you tapped out of the market. Everybody that was selling here got capped out. Everybody that was selling here got capped out. Everybody that was selling here got capped out. Why is that? What were they doing wrong? They were looking at this entire bearish leg and thinking that because price was retracing here, that was a premium range to sell from. Ain't wrong. What were the market makers telling us? Again, showing you guys from a detailistic perspective that the market makers, let me kind of clear up the charts real fast, that the market makers were grabbing liquidity from lows and sending the market higher. Again, showing you guys that the banking institutions are the only people with the amount of money to manipulate price to give themselves discount to then take buy positions and shoot price back to the upside. Here's the same pattern. New candlestick formation. We see the market grab liquidity from lows and make new highs. Same freaking pattern, you guys. Would you look at that? Grabbing liquidity from lows, making new highs. It is the same pattern here that you see right here. Coming into this New York session, we saw that same exact pattern here at CYPRX, where the market grabbed liquidity from lows and made new structure highs. It's the same exact pattern. So all we had to do to wait for this nice bullish move on Gbpjpy, where I told you guys, here's the screenshot again, that I had buy limits set at 158.075, and now I'm going to take you guys down to the lower time frame. So with all that in mind and everything that I just taught you guys, we can see here's that pattern before we jump down to the lower time frame. London session manipulated price to the downside in their manipulation window. I cover the manipulation window in all of the CYPRX YouTube content. If you guys don't know about that yet, go back and watch it. But if I was to put on the manipulation window right here prior to the start of London session, you guys can see how they manipulated early sellers to give themselves discount, to build liquidity above highs, to grab lows and send price higher. Here's that pattern right here. Grabbing liquidity from this low, London giving themselves discount to make new highs, and then they pass price action over to New York. So piecing all of this together, if you're still here with me, what are the confluences that we have? We have 15-minute bullish order flow. We have 15-minute structure in the form of the market makers manipulating price to the downside to give themselves discount to send price higher after taking buy positions. We also understand that the previous session to this New York session that we're currently operating in took a buy position. So logically speaking, until this low is broken in the form of bearish order flow, lower low, lower high, we are not going to be looking to sell price action that is trading against the higher time frame. So understanding all that, now let me take you guys into the lower time frame perspective. Let's jump down to the 5-minute chart to why it is that I was entering into this area. Showing you guys the screenshot again that I sent to the CYPRX students. I have buy stop set at 158.075. Taking my Fibonacci and how I got those levels. If I just rewind price action to right here, you guys can see this is where price action was in the form of time when I sent that to the CYPRX students, taking my Fibonacci from the low where London session bought from, extending that up to the high where they pass price action over to New York. If price is going to continue this bullish order flow, most likely New York session is going to purchase from a discount where London session bought from after the liquidity grab was taken, and that so happens to be around the 62 to 70% discount, which just so happens to be around the psychological level 158.075. Okay, if you guys want to know how I get those psychological level projections, again, the link is in the description down below for the advanced mentorship. But anyways, so price comes down into that general vicinity. As you guys can see, I sent that to the group chat, and then price targeted those areas, tapping into that 50%, 62% retracement. Again, the ideology behind the banking institutions during New York, when they were past price action, got it passed at a high. They are not going to buy price action from a high. What did they do? During the manipulation region, during New York, would you guys look at that? What did they do? They manipulated price to the downside to give themselves discount from where London session bought from, i.e. the piggyback methodology, banking institutions like to buy from where previous banking institutions bought from. And boom, We had a beautiful rejection of the psychological level 158.075, respecting the quarter methodology, and we have a beautiful execution of the 62% discount on the Fibonacci retracement, which led to a nasty, beautiful risk to reward ratio. All right, and showing you guys how this trade played out, we tapped into the 62% retracement to the T. Again, the ideology behind the banking institutions are not going to buy from a high. What are they going to do? Manipulate price. Here's the manipulation range during New York session, where we can see early sellers, early buyers. Banking institutions during New York came to liquidate the early over leveraged buy positions to then come and attack the early sellers and people who were willing to have buy stops above these highs once price did retrace back above the early sell positions. As you guys can see, playing this price action for you guys, boom. Beautiful rejection of the psychological level that I sent to the CYPRX students. Fractal structure now, you guys can see that same pattern. You guys, this is insane. I'm not making this up. On the fractal nature of things and on the higher time frame, the market makers will continuously show you the pattern. And again, this is how we confirmed that bullish order flow was still dominating the market. If you guys haven't yet identified the pattern, pause the video and you guys can see here the market makers grabbing liquidity from lows, manipulating price to the downside out of the manipulation box, and then sending price higher, creating new highs. Once we saw this type of price action here on CYPRX, we could confirm that this was a nasty bullish move that was going to take place to most likely come and attack the liquidity above the manipulation region for New York. And if we highlight the manipulation range above Asia session, this is where they push price action to. So these were my initial targets. I told the CYPRX students, as you guys can see from the screenshot, that my overall targets were 158,500. Those psychological levels came into fruition, and we came to attack the overall highs from above where early sellers took place during the manipulation range of Asia session. Let me play this out for you guys. Boom, smashed right through it. Showing you guys again, time and time, that the market makers are completely in control of this market. If you do not understand how to trade manipulation and how to identify institutional patterns in this market, you are going to continuously get capped out. If you're trading support resistance, if you're trading order block methodology, and you're consistently losing in this market and you want clarity, guys, I'm telling you right now, the link in the description down below will take you guys to that level of clarity that you are seeking. We are not going to be open to the general public much longer. I'd say probably only a few more months, where we are going to have open enrollment for people that are looking and seeking to take their career to the next level. Blessings to you guys all. Before we end this video breakdown, I just want to confirm to you guys where it is that I had my stop loss level at, just so that way you guys can have some clarity. In case you are seeking to trade forex or cryptocurrency or whatever the case may be, you need to make sure that you are protecting your position and securing partials. So with that being said, where my stop loss was leads me back to logic in the market. Logically speaking, what we would have needed to see a bearish reversal with this current price action information is a break of this London session low. We would have needed to see price action break this low, hold and close below in the form of bearish order flow, or for the market makers to start creating lower lows and lower highs. So with that being said, my stop loss, as you guys can see, was right beneath the London session low, because that, logically speaking, would have unvalidated my overall bullish analysis. So I hope that you guys enjoyed this video breakdown. Smash that thumbs up button if these video breakdowns are helping you guys out, gain some clarity in the market. Regardless if you're trading forex or cryptocurrency, I highly advise that you go back, watch previous YouTube videos of price action analysis, jot down some notes, get a little black journal, take notes of everything that I'm saying to you guys. I'm trying to give people clarity in the market, and I'm telling you right now, CYPRX is not going to be in the public eye for too much longer. We're going to continue on this YouTube channel, but the mentorship is only going to be available to people that are seeking to take action in their trading career now. Blessings to you guys all. Really do appreciate the love and the support. Follow me on Twitter if you haven't done so. As always, be cognizant. Please be aware. Enjoy the rest of your week, and I'll see you guys in the next video breakdown.